Hi, I'm Jessica Amir for the Finance News Network. Today I'm with VanEck Australia's John Caulfield. Hi John, and welcome back.
Thanks Jessica, good to be back.
So you're an active provider of ETFs in Australia, but for those who are not really familiar with VanEck, just give us a quick introduction.
Sure, VanEck is a global investment manager. We've been managing money since 1955. Over the last 12 years or so, we've built out an ETF business that now has total assets of over 50 billion Australian dollars. We've been in Australia around 5 years and now have 17 ASX listed ETFs.
So John, before we talk about the VanEck Vectors S&P ASX MidCap ETF, maybe you could just talk about the MidCap segment.
MidCaps actually incorporates a lot of the best attributes of large caps and small caps, and the active Aussie equity managers often find their best ideas in this segment. They're often less prone to the influences of macro turmoil, being more domestically focused. Management have more sway in terms of what direction the companies go in. The average market cap is around 6.5 billion Aussie dollars. The sector is actually very diversified across both stock and industry level and is often known as the sweet spot of the investment universe.
Thanks John. Now can you tell us about the underlying index in a little more detail?
The index is actually really simple. It's part of the S&P ASX index series. And mid-caps are defined as stocks number 51 to 100 on a market cap basis.
Thanks, John. And you've mentioned sectors, but can you just highlight sector exposure and performance as well?
Well, over the last 15 years, mid-caps have actually been the standout performer in the domestic market, returning over 9% per annum. And over 3 and 5 years, the sector's actually outperformed the ASX 200 by 3.7 and 6.06% per annum, which is pretty substantial. At a sector level, you do get different exposures to ASX 200, overweight consumer discretionary, materials, IT, and that means you're exposed to different revenue sources to your traditional large cap stocks, which obviously are dominated by the financials.
And what else do you think investors should be aware of?
Investors' portfolios generally need more exposure to the mid-cap sector and better exposure. So the mid-cap ETF, ASX ticker MVE, is actually the only ASX listed ETF providing this specific exposure. The fee for the ETF is 0.45% per annum, and it obviously trades during the day on the ASX at a price very close to the net asset value of the underlying portfolio.
And what can you tell us about the risk-return characteristics?
Well, as I mentioned, the performance has been really good against both the large cap and the small cap universe. And there are a couple of reasons for this. Against their large cap blue chip peers, they do have more scope for growth. And against the small caps, they have better access to capital, tend to have better risk frameworks, better governance. Cash flows are a bit more stable, and that means share price is a bit less volatile as well. And from a risk perspective, looking at standard deviation over the last 5 years, as you would expect, this sits in between large caps and small caps. But if you look at the Sharpe ratio, which is actually how much you get rewarded for the level of risk you take on, the mid-cap sector actually gives you over 2 times the return to the small cap sector and over 5 times the risk return to the large cap 20 index.
And lastly, John, what's your parting words to investors today?
As I mentioned, mid-caps are a really underrepresented segment in most portfolios, but a really important driver of returns and diversification. MVE is actually the only way in a single trade on ASX that investors can access a diversified portfolio of mid-cap stocks. And there's a lot to like about them. They're not too big, not too small, and they really are the sweet spot of the investment universe.
Wonderful. Thanks so much for your time, John Caulfield.
Thank you.